Kevin, what are you seeing when you look at the data? I saw you nod when oil was mentioned there, energy playing a role here. What do you see?
Well, the oil sector represents commodities in general, and we've seen, we saw the super cycle, we saw the decline, now we've seen a rebound. It's no longer driving inflation as it did a few years ago. And I agree that inflation is likely to be low for some time. It's interesting, in your lead, you mentioned that some major investment houses are saying, oh, inflation is getting back to 2%. 2%?
Yeah.
Right? We were barely above 2%. We dropped below, and now the claim is, you know, the inflation optimists are saying we'll get back to 2%. Yeah. So that's not much of a danger. And I should mention this is worldwide. It's not just in the United States. Inflation is low in Europe, it's low in Canada, it's low in Japan. In fact, if we look at all the G20 countries, inflation is its lowest point now since the recession in 2009. There's not enough demand growth in the global economy to really push inflation higher.
Yeah, Kevin, let me bring you up to my chart. For radio, I will push that on social media. It's another way of tracking inflation, right? This is a break-evens. So I have the 10-year here at the bottom and the 30-year rate here above. If the expectation in the market changes suddenly, it means that bonds will actually change significantly. What's your take, Kevin? Is inflation going to pick up in the next 3 months or not?
Oh, it'll pick up over the next 3 months. We had an exceptional decline in inflation in the first few months of this year. I think everyone's aware of that sudden and very large drop in the cost of wireless telephone services, a few prescription drugs going off patents and their prices dropping. Now, we're back on trend, I believe. So over the next 6 months, we'll see the inflation rate, which is currently the core inflation rate, about 1.4 or 1.5%, move back up to 1.8%, getting a little closer to 2%. Yes, it'll go up over the next 3 months, but it's not going to breach that 2% level, not for the PCE that the Fed follows. And consequently, I don't think the break-evens, if they do pick up a bit, are going to flash danger signals. They'll just say, yes, we're out of that trough, moving up a little bit, but we're not going to experience, I think, sustained inflation pressure that will really affect the markets.